initially contributing well to the positive, but now has slipped to the top negative contributor. It's down around 0.5% thereabouts. Among other contributors, M&M, TCS, Power Grid, NTPC, all doing fairly well in trade in terms of top gainers on the Nifty. And, while I pull those up, we're seeing Bharti Airtel, of course, being the top one, 2.2% higher. Divis Labs also seeing good traction, 2% higher. Cipla, so some bit of pharma coming in along with Power Grid, M&M, as well as NTPC. So energy, pharma is what is dominating markets, at least as we speak. Let's quickly move on to the small and mid cap space. The small cap 250 index is up around 0.2% thereabout. The mid cap up around 0.75%. Let's look at the breadth of the market as well. The advanced decline likely strongly in favor of the advances. There you go. We have 1,300 advances to around 700 declines, nearly 2:1 in terms of that ratio. So the breadth of the market definitely positive. Let's pull up the Nifty Bank, because that's one sector or one index which will largely pull the Nifty 50 as well. But the Nifty Bank is up around 1/3%. There you go, 0.4% higher. The Nifty Auto too, balancing that good line in terms of positivity, around 0.4% of gains on the Nifty Auto as well. So those are two sectors which are in focus. The Nifty IT though, let's pull that up intraday, and it's up around 0.5% thereabouts. So the Nifty IT index also doing fairly well in trade, even though it wasn't at the start of trade, as you can well see. So those are some sectors which are abuzz, contributing well. The Nifty Metal and the Nifty Pharma. The Nifty Pharma is up 1.6%. The top sectoral gainer for the day is the Nifty Pharma. The Nifty Realty also seeing good traction. That's broadly how currently we are seeing markets. So clear positivity across the board where markets are concerned. But sugar stocks in focus. We're seeing sugar stocks do very, very well in trade today. There's been a new rule which will allow sugar mills to use cane juice or syrup for ethanol production rather than diverting it towards sugar. Let me bring in Varsha with some more perspective and how this can aid sugar stocks even going forward. Varsha.
Sugar stocks that are buzzing today, so starting with Dalmia Bharat to Hindustan Sugar, Bajaj Hindustan Sugar, then Triveni Engineering, Banari Aman Sugar, all these stocks actually have hit an intraday high of more than 10%. Now let's see why this buzz. So government has put no cap on sugar diversion for ethanol. Earlier this cap was 24.12 lakh metric ton in ethanol supply year 23-24. Now this simply means that government has removed the limit on how much sugar can be used to make ethanol for 24-25 ethanol supply year. Through this, company will be able to generate more revenue and margins because more ethanol now can be produced without any cap. Now, government has a target of taking ethanol blending to 20% in next 2 years from 13% currently. And government has additionally permitted distilleries to buy up to 2.3 million metric tons of rice from Food Corporation of India exclusively for ethanol production. Now, also to prevent the disruption in domestic sugar availability, the Department of Food and Public Distribution and the Ministry of Petroleum and Natural Gas will work together to monitor and review the diversion of sugar for ethanol production. Now, this all policy change is a part of government's ongoing effort to increase ethanol production and to promote sustainable energy practices.
Well, thanks for that, Varsha. But let me take this across to our guest for today, joining us on Ask Profit. Gaurang Shah, Head Investment Strategist from Geojit Financial Services, and Rajat Bose from SEBI Registered Research Analyst join in. Hello and welcome to Ask Profit. Gaurang, let me take it across to you first. What does the new develop mean for the sugar stocks and overall outlook for the whole sector in general?
Well, thank you very much, and good morning to all of you. Thank you for having me on the show. Government's policy is very clear when they replaced naphtha with ethanol some years back. The unfortunate part was that the blending capacity with oil marketing companies with respect to ethanol getting blended with petrol and diesel was at a very low scale. Over the years, they have managed to ramp up their blending capacity, and more and more demand for ethanol is likely to be there as we go into the future. Along with that, every year or so, we have seen government revise the ethanol prices upwards. What it was 1 or 2 years back and what it is currently, there is a huge difference. So this, turns out to be a very good revenue generator for these companies which are associated with the sugar sector. And there was a little bit of constraint for these companies because government had put a cap in terms of how much you can divert towards ethanol and how much sugarcane juice and molasses could be diverted towards manufacturing of sugar. Now, with this cap being removed, I think there's going to be a very strong focus of all these companies into manufacturing of ethanol at a larger scale. The only point remains is the oil marketing companies' capability and capacity to blend more and more ethanol with petrol and diesel and its other, byproducts, crude oil byproducts. So the sector looks very interesting. Unfortunately, the only thing as an overhang is the debt on the balance sheet of some of the sugar manufacturing companies, given the price gap between the sugar cane and the sugar that is manufactured. But I think with ethanol becoming a focus, this debt burden could get reduced to a great extent.
Right, Gaurang, sorry, but two more quick questions on sugar. One is with regard to regulation. Do you believe a more stable regulation helps? And along with it, if I can couple the price question, do you believe that a higher price is something that one can expect both on ethanol as well as sugar? And third, is there a preference in terms of stocks?
So I'll ask you your last question first.
Sure.
We had coverage on Balrampur Chinki a while back, but the stock has overshot our target price by almost about 50 to 100%. So we had given out a book profit advisory on Balrampur Chini, and then we have not covered Balrampur Chini or any other stock specific idea in the sugar stroke ethanol sector. With respect to your first question, regulation, I hope that there is concrete base in place in terms of policies, because very often we have seen, to and fro kind of news flows coming in from the government as far as the sector is concerned, and then the sector and the respective companies get impacted depending upon which way the news flow is, either positive or negative. In terms of the price disparity between sugarcane, sugar and ethanol, I think the MSP module is in place for this particular crop, that is sugarcane. And as and when the need arises, I think the government will take appropriate steps to stabilize the variation as far as sugarcane, sugar and ethanol is concerned. Unfortunately, last year we had a deficit monsoon, and 3 states which are the largest producer of sugarcane, that is Uttar Pradesh, Maharashtra and Karnataka, suffered a deficit rainfall and the crop production was not up to the mark. And that's why you had a little bit of disturbance in terms of earnings also. But this year rain gods have been kind enough. Let's hope by the time we say goodbye to the rain gods, we have a stable situation in terms of sugar as a crop being produced.
Right. Rajat, I know we've not taken your views, but I'm going to quickly go to queries first. Coincidentally, Gaurang, we've got a fundamental query first and a very fascinating one. We have Mohit from Ludhiana. 2,000 shares of Trident at rupees 3.9 per share is what he's bought it at. He has another 2 years in terms of time horizon. This has been a 9-bagger for him, 9.5-bagger for him. 66,000 rupees in profit. What should he do?
Well, I hope I could answer it straight away. Unfortunately, you don't have a coverage, but you are absolutely right. The stock has been a flyer. And it has been one of those lower double-digit kind of stocks and some kind of an underperformance for a pretty long period of time. But I think over the last maybe about a year or two, there has been some stability in terms of earnings. And these kind of stocks, you need to be extremely careful in case if you are having a long-term time horizon, most importantly with respect to the earnings getting reported. Do you see any kind of variation on the negative side with the earnings? I think these kind of stocks take a knock on the chin, and then the investors don't get an exit route because of the price fall. So right now things are good, but I would request the investor to keep a very close eye on the earnings, and in case if there are some alarm bells ringing, then take appropriate steps.
Okay, so that was the view on Trident now. Now I'll come to you, Rajat, for the next query. Now this is from Subramaniam from Chennai. He wants to understand the short-term outlook on Lemon Tree Hotels. He bought it at a price of 100, at an average price of about 104, 100 shares that he bought. What is the medium-term outlook on this? Shall he book profits early or switch over to some other stock? Now the stock has been under pressure in the last 1 month and 6 months. Rajat, what's your view on Lemon Tree?
Its uptrend has been broken because so far it was for the last say fairly long period of time, say 3 years or so, a 50-week moving average or 200 exponential moving average was not broken. But now it has been broken decisively, and there is an attempt to reclaim that average. But what I would say is that if you find that it was on a tear for a long period of time. So if one is holding on to a large amount of profit, then one can always book at least partly. Otherwise, put a stop loss below 120. If it were to fall below 120, definitely one should seek an exit from this. No fresh buying is recommended.
Right, Rajat. Gaurang, let me come back to you. We have Kapil from Ajmer who holds 300 shares of Macrotech developers at 1410 rupees a piece. Currently the stock lower, of course, 1258 is the current price. So my guess is he's making quite a bit of a loss. There you go, 45,000 rupees. Your sense, what should he do? Because the realty cycle is on fire.
Absolutely on fire, and I think the government policy is very loud and clear. We've heard the Honorable Finance Minister speak on this particular sector very clearly. Affordable housing, housing for all. And when the Honorable Prime Minister, first day of the office, he had signed creating 3 crores houses for rural India, semi-urban and rural India. So the sector looks promising, absolutely no doubt about it. And I think more importantly, with the kind of regulation change and policy change that has happened in Maharashtra, especially in Mumbai, because in Mumbai, we all know, it's an island city and there is a lot of dearth of availability of space. So there has been redevelopment, cluster redevelopment and redevelopment of huge societies, which has created a big opportunity for players like Macrotech, that is Lodha, and players like Godrej Properties, Oberoi Realty, which are Mumbai-centric companies. We like the sector. Unfortunately, we don't have coverage on Macrotech, so I won't be able to comment directly. But there was an issue with this company with respect to the debt on the balance sheet and certain projects coming in terms of execution delays, etc., etc. So the sector looks promising. The price point where this investor has got invested is very, very elevated. I have no idea what is the time horizon. But you need to be careful because real estate sector, despite RERA and all the policy changes coming in, it still remains to be a high beta sector.
Okay, switching focus from the realty to the defense space now. The next query, Vijendra is asking on whether he should continue to hold 15 shares of HAL, that is Hindustan Aeronautics, that he bought at a price of 4,900, currently sitting at a 45,000. So Rajat, I want to come to you on this one. What's your outlook on HAL?
HAL is now consolidating. I mean, it did post a high around 5,600 a couple of months back, but now it is struggling to take out, say, 4,800 supply zone. But so long as it doesn't fall below its 200 exponential moving average, which is close to around, say, 4,000 mark, it won't be bearish. But if one wants to book profits, then one can always do that. And if you are planning to buy this stock, then at least wait for some time. Say, if it comes down to something like 4,500 or say 4,300, around those levels you buy and put a stop loss below 4,000 or say 3,950. That would be a good thing. But then currently one should not be getting out. Neither one should buy at current levels.
Right. Gaurang, let me take it across to you. We have Satya, a viewer. She wants to understand your views with regard to NBFCs. 1 year time horizon is what she has. M&M Financial or Poonawalla, or a split among both of these? What's your viewpoint?
So let me give a disclosure. We have fundamental coverage on M&M Financial Services. Poonawalla FinCorp, there is no coverage. So according to the regulations, I won't be able to comment on that. And if I have to look at business-centric focus, then M&M Financial, the reason why we like this particular company is that, first of all, they have got a very decent management, very strong pedigree in terms of capabilities and capacities of the management. Focus of NMM Finance is largely, of course, they are in tier 2, tier 3 cities, but large focus is on semi-urban and rural India. And over there, I think the kind of back-end support that this company gets from M&M, which is the flagship company of the M&M group, that's very, very interesting. So if I have to put my money from a long-term point of view, my choice would be M&M Financials.
Okay, Rajat, for the next query, I'll come to you. Now, this is from Yash Jain from Nagpur, Maharashtra. He holds shares of Solar Industries at a level from 9,000. Wants to understand the medium-term outlook on this one. What's your view on Solar Industries?
Regarding Solar Industries, what I would say is that it is showing some kind of a positive activity in today's session. Otherwise, it was pretty flat and range bound for the whole month of August. Once it moves beyond, say, the 10,000 mark, then probably you will see further upswing happening.
Okay, that's Rajat on Solar Industries. Rajat, let me stick with you. Shibi from Kerala wants your view with regard to Fortis Healthcare from a short-term perspective.
See, regarding Fortis Healthcare, what I would say is that it is in a trending mode, and the trend is clearly an uptrend, since the 9-day exponential moving average is hardly ever broken, and even if it is broken, it doesn't stay below that for more than 2 sessions. So I would put a stop loss around, say, 520, and I would suggest that he continues with it. Chances are that 585 to about 598 would be the short-term target. And so long as, it's very easy to see today the 9-day exponential moving average. Unless it falls below the moving average for 2 sessions, one need not get out, even if it is a short-term trend.
Okay, so Gaurang, let me come back to you on this one. Now, Hersh from Chennai wants to understand your view on Bharat Electronics for the next 2 to 3 years. He currently holds about 1,000 shares, and this is at an average price of 48. Currently at a profit of about 2,500. What's your perspective in terms of Bharat Electronics? How are the valuations stacking up in this one, and what's your outlook for the next 2-3 years?
So before commenting on the valuation and the outlook, I think I must congratulate him. The level at what he's bought it is a fantastic. He identified an opportunity, a very fantastic level from a long-term point of view. As far as the outlook on BL is concerned, a disclosure again from my part, prudent to give that. We have fundamental buy call on BL from a long-term point of view, Bharat Electronics Limited. And we are, as a brokerage house, extremely excited on the entire defense space, whether it is, I'm just giving you names in terms of which are those strong, fundamentally strong companies. This is not a direct recommendation other than, of course, BL, where we have a recommendation. So you were discussing Hindustan Aeronautics, Bharat Dynamics, Cochin Shipyard, Mazgaon Docks, Garden Reach Shipbuilders, likewise BEML. These are all strong fundamental companies. And not to forget, these companies have rallied almost about 100, 150, 200% or more in the last maybe about year and a half. So from those levels, even if these stocks have to correct maybe 15, 20, 30, 40% from a shorter point of view, I don't think anybody should have a reason to complain. The outlook remains extremely positive for the defense sector, given the order flow that these companies have spoken about in the very recent management interviews that we have listened into and heard into. And the commentary in terms of the next 3 to 5 years in terms of order intake is very, very strong. So if you're going to have these kind of strong order books, and if you have the capability and capacity and experience and the technology to execute that order book, I think those executions are going to translate into top line and profitability. So instead of looking at short term investment or trading ideas into defense stocks, I think you should have at least 3 to 5 year kind of a time.
Right, 3 to 5 year time horizon. But let's switch focus. Rajat, with regard to KRBL, we have Anil Kumar, who holds KRBL at 337 rupees a piece. Your targets is what he wants to understand. Anil from Kerala.
The immediate target, if first of all, the stop loss should be placed below 265. That should be the stop loss, and immediate target 341, and thereafter it would be 361. If 361 is taken out, then expect some further upswing. Otherwise, it would remain a bit range bound.
Rajat, I'll stay with you for the next one as well. Now, Darshan from Surat, Gujarat is looking to invest for the right time in JK Tyres and Apollo Tyres. Wants to understand from you, is this the right time to enter in these two counters?
The first JK Tyres, I would say that had it been testing its 200-day exponential moving average for the first time, I would have said that one can attempt to buy. But it has been testing that moving average for the fourth time now. And if it were to fall below, say, 395, there could be further fall and it could go down to 360. Currently, this is not a buy, and only when it crosses 425, it can become a buy regarding JK Tyre. And what was the other tire company?
He was repeating about JK Tyres and Apollo Tyres.
Only JK Tyre?
JK and Apollo Tyres. Both of these counters.
JK Tyres
See,
and Apollo Tyres, Rajat.
Yeah, I got it. Yeah. Apollo Tyres is also range bound, and it is also doing the same thing. And Apollo Tyres in the last several months, I mean, say from May this year, it has tested the 200-day exponential moving average almost on four occasions. Again, it is testing. Even yesterday, it came very close to that. So what I would say is that there is no point being in this unless you are actually holding it for long term or whatever. But this will become a buy only if it crosses 510. And if it fails to take out 510 again, then one should better get out of it if one has a position. And if you ask me, should one buy this? No. I mean, none of the two tire stocks I just reviewed, I would say there is no buy call from my side.
Okay, no buy call on tires, but let's switch focus. Zomato. We have Ram from Mumbai, Gaurang, who has bought 6,000 shares of Zomato at 66 rupees a piece. We've seen 2 to 3 fabulous retail compounding stories just on the show today alone. Of course, we've been seeing it all week, but today in particular, we've seen 3, and this is one of those. What would you do, Gaurang, at this point with regard to Zomato? He's making a profit of 11 lakh rupees.
Well, congratulations to him, and I hope this is not the only investment, because overexposure to any particular sector and stock is also on the fundamental side not advisable. One of the most important thing of this particular investment is the price.
Gaurang, I'm sorry, I'm going to have to cut you off there because we're getting live coverage from the Global FinTech Fest, where the Prime Minister is addressing all the participants there. Listen in.
Mark on our collective consciousness. As we gather here, let us reflect on the transformative journey that India has embarked upon under Prime Minister Modi's guidance. From economic reforms to digital empowerment, from Swachh Bharat Abhiyan to Make in India, his initiatives have touched every corner of a vast and diverse country. India today is the fastest growing large economy, is on track to become a $10 trillion economy in the next 10 years. and a $30 trillion economy by 2047, achieving the goal of Viksit Bharat. Prime Minister Modi's vision extends beyond borders. His diplomatic acumen has strengthened India's position on the global stage. Whether it's fostering strategic partnerships or championing climate action or bringing peace to conflict regions, he leads with conviction and foresight. Today, we celebrate not just a leader, but a beacon of hope, a man who believes in the power of unity, innovation, and progress. Sir, GFF 2024 is probably the world's largest annual fintech conference. GFF brings together luminaries, policymakers, regulators, and fintech founders for insightful discussions, groundbreaking technologies, and networking opportunities. The theme for this year's event is Blueprint for the Next Decade of Finance, Responsible AI, Inclusive and Resilient, and features over 1,000 speakers and 300 plus sessions. Before I invite Honorable PM to speak, I would like to invite RBI Governor Sri Shaktikant Das ji to address you. RBI has been very key in partnering with GFF.
Honorable Prime Minister, Sri Chris Gopal Krishnan, industry leaders, esteemed participants, members of the media, ladies and gentlemen. The Global FinTech Fest GFF has emerged as a flagship event showcasing innovations, technological transformation, and the spirit of collaboration in the Indian fintech sector. Started in 2020 with 12,000 participants, GFF 2024 has so far seen 80,000 participants. This demonstrates not only the growing stature of this event, but also the growing prominence of India in the technology-driven financial innovation. The presence of the Honorable Prime Minister in GFF 2024 inspires all of us to put in our best efforts to build a fintech ecosystem that is truly future-ready. In this endeavor, our priority should be to build an environment where financial services are seamlessly integrated into the lives of our 1.4 billion people. India now stands on the cusp of a transformation where technology will be the engine to meet aspirations of every citizen. From mobile banking to digital payments, AI-driven lending, blockchain innovations, the fintech ecosystem is constantly evolving to meet the diverse needs of our growing economy. Digital technologies have been instrumental in expanding financial inclusion, improving efficiency, and enabling real-time services across the country. Today, India stands as a global leader in digital payments, a feat achieved by combining proactive policymaking with innovation and technological advancements. Collaboration between policymakers, regulators, and innovators is a defining element of India's fintech journey. The success stories in our fintech space like Aadhaar, UPI, and the DigiLocker are results of such collaborative efforts. Initiatives like Account Aggregator Framework, Unified Lending Interface, that is ULI, Open Credit Enabled Network, that is OCEN, and several others are expected to redefine credit access, particularly for small businesses and individuals. The Reserve Bank's regulatory frameworks have facilitated new and innovative businesses to grow in an orderly manner. These regulatory initiatives reflect our commitment to support innovation with prudence. Our collaborative approach is visible in the fact that we have held large number of interactions over the last 1 year with the fintech sector players. For example, the various departments and officials of the Reserve Bank have held about 750 bilateral interactions and held about 50 structured meetings with the fintech players. As we march towards India at 100 in the year 2047, I urge every participant at this GFF and others who could not attend, and hopefully, and I'm sure, they will attend the future editions of GFF event. I would urge each one of you to continue dreaming, innovating, and pushing boundaries. Thank you. Namaskar.
धन्यवाद. थैंक यू गवर्नर सर. अब हम हमारे सम्माननीय भारत के यशस्वी प्रधानमंत्री डिजिटल इंडिया के शिल्पकार श्री नरेंद्र मोदी जी से विनम्र अनुरोध करते हैं कि वे ये सभा को संबोधित करें. वी रिक्वेस्ट प्राइम मिनिस्टर ऑफ इंडिया